Friends, in this video for ithought Advisor, I am going to talk to you on the topic, is decoupling really possible? Every time we see the world go in a negative direction, when you see world economies becoming very unpredictable and volatile, the question that comes to our mind is that, will India simply mirror what happens in the world, or can we tread a separate path? There are two sides to this subject. The first is on the economy and the second is on the stock market. Economically, there is a possibility that we could see far less pain than seen in the Western world. The reason is that we have handled inflation relatively better than how they have handled, and the factors which are contributing to soaring inflation in the West don't exist in India. The way we have responded to COVID was very different from the way the West responded to COVID. As a result, we see today that the West sees far more adversity due to inflation, and inflation will become a more difficult beast to tame for the West than to India. Also, we have seen how the Indian government has managed the supply side in critical inflationary items. Food has been one of the most important items in this list, and India has done a better job than the West. In the West, they let market forces decide. India is not a country where market forces can be allowed to decide prices. As a result, when you allow market forces to decide prices, then prices tend to go out of control, and then it takes a lot of heavy lifting to bring prices under control. India has taken a different, safer path. The government has interfered and intervened in a reasonably timely way when it appeared that the supply side was under risk. Tracking supply, they have taken measures which would ensure that the prices don't go out of control. So, effectively, we have ensured that prices don't go out of control, and as a result of which the problem which the government will be faced with would also be controllable. So, the approach taken by the government is certainly going to help us battle inflation in a more controlled way than the West would be doing. In that sense, our economy is likely to decouple from the West because we have a fair chance of managing inflation, and we would have inflation under control much before the West has it under control. The result would be that the rising interest rate cycle in India is likely to pause earlier than in the West. And we would also be in a position to reduce interest rates whenever we see rates go down in the West. So we don't have to wait or be anxious and delay intervention on interest rates on the way down. This has not been the case in the past. We have always faced more trouble than the West. In that sense, this time could potentially be different. I know a lot of people don't believe that, but this is my sense of what can happen. Now to the stock market. In the past cycles, India was completely coupled with the West. For brief periods, you would see decoupling and then it would quickly couple with double force. But in the last few years, there are some significant changes in the Indian market, like retail participation, allocation of EPFO funds to the stock market, deepening and broadening of the capital market and the financial infrastructure available for investors, better awareness of investors towards investing in financial assets, very high number of money coming every month into the capital market through the SIP route, better allocation of money towards equity as an asset class amongst various asset class, equity gets a higher share of asset allocation, which has never been the case, and there is a lot of headroom for equity to get a far higher share of asset allocation than it currently is receiving. So, if we take the next 10 or 20 years, I can confidently say that equity will get a far higher share of asset allocation than it is getting today, which means that domestic capital available for the capital market is going to be a big factor in support of decoupling. But you still will not get decoupling unless the FIIs also buy into the India story with more confidence and with more allocations than they do in the parent markets. Now that has to be a very big ask. But look at the circumstances. FIIs are selling equity for a very long period of time. So they have been moving out already. And if there is more trouble in their local markets, we need to wait and watch whether they would further take out money from here or say, my parent markets are not good, let me go and put money in EM and India looks to be a decent place. If that happens, then decoupling is a certainty. But there are a lot of ifs and I have listed out what needs to happen. So let's keep a close watch on what happens in the market, what happens in the economy, what happens in the West, and the relative strength which India is going to show compared to the West. All these factors will determine whether India really has the capacity to decouple both in the economy and in the stock markets. That's something which is open and still likely to go either way, but if I were to bet on it, I would bet that we could see a decoupling anytime in the next few years. Thank you very much.